Good evening, everybody. All right. Nothing that can't be visually analyzed as far as what's going on in the market. And we can see the fry pan bottom. We can see the J-hook pattern, the classic type pattern. And you can even get it more refined by the fact that you had kind of a bullish engulfing left-right combo right on the T-line, starting things back up again in the Dow. And the NASDAQ, we could see the left-right combo right off the 34. And then they gapped it up above the T-line, and that's where we're trading. So you can see, this is just kind of observe the obvious. There hasn't been any change of investor sentiment as long as we're staying up above the T-line. Trying to even think of things that are crude oil hovering up in this range, which is surprising. I thought with all the new finds, maybe it takes too long to get crude oil on the market. Gold still sinking. Make this a little bit. So anytime you can see that type of wedge, they break it, it's that much more obvious. Now, they break it with an evening star signal and then a gap down through what would be support levels. Gold still in a downtrend. The only other thing that we're trading right now is live cattle, which is also apparent. Very J-hook pattern. Wave 1, wave 3 is equivalent. Where's the next logical target? Right down here to the 200-day moving average. So we had a good market again, and that's in, I guess, sifting through all the political rhetoric that's coming out of Washington. Plus the subway attack in New York City. Things that you think would just kind of deter investors, not changing things. This market, as we have seen, it's been a steady uptrend for the past year. So this is why you go more with what is happening with investor sentiment and what the markets are telling you versus what's happening out there that would seem to be influencing the market. Just have a bunch of stocks here. A bunch of stocks that have good setups. Here's ACET. Hold back right to the T-line in the 50. J-hook pattern. If this confirms, where do you think the next target's going to be? Right up here to the 200-day moving average, well into the gap area. And why do we like to see it get into the gap area? Because there's no resistance up there. There's nobody up there that says, man, if it ever gets back to where I paid for it, I'm going to sell it. Cure, little kicker type signal. You want to stay long on this. I'm going kind of through the ones that we've been recommending. We could see what was happening in Riot. Kind of a wedge formation, and they broke out to the upside. And that's where I always ask a rhetorical question. We always get into situations where you have big percentage moves. Is it too far from the T-line? Well, you got to remember, we're buying the pattern, not the T-line. So we want to see what the pattern is telling us. And yes, one deterrent would be the T-line hasn't caught up, obviously. So we still want to see what the action is because of the wedge breakout. Back to 22. All right. That could be because Mara was another big price move. And then they cleverly came out after hours saying that they were putting out a new stock offering, so it's trading back. That's where it's showing where it's trading right now. So it's trading back in this range. But same scenario. This had a Morningstar signal. So once again, these big price moves are based upon when the market gets a little bit, I won't say lethargic. I'm reading what John's saying. Gets lethargic. Quite often you'll see one specific group of stocks or a sector start really running strong. And it's not because anything new has occurred there. It's because they might start off running strong, and since they're the only thing going on in the market, all the traders go to those stocks and start trading them because there isn't anything else in a lethargic market to go after. So it just kind of I'm still losing my train of thought. I forgot what I was even talking about. So I'm going to just move on. Let's see. But that's the whole point, John, of knowing what to do on each individual situation. Is what type of moves do you want to get into? Obviously, these type of moves. There's a lot of times where those type of moves could get started and they fail. So this is again comes back to that what do you want to do? You want to get out of the ones that are not working. So if you bought today and it came back down through this level, what should it be doing on a positive open? It should be going in this direction. And why would we want to see it go in this direction? Because that would tell us it's breaking out through this level going into wave 3. If it opened positive and then started trading back down through this level, what is it? What's it telling us? That they weren't breaking out. You close it out. What's the worst case scenario? It comes all the way down here, then comes back up through that level. You can always buy back in. Why would you buy back in? Because now the momentum is coming back up again, going into the breakout area. That's right, Rick. So there are lots of situations. What we're trying to do is we're trying to find the situations where we've got a good, consistent profit trend. Well, how do we know this is going to be a good profit trend? Well, first of all, we're analyzing the chart. But this has the prospects of creating a good profit trend. Now, the next day, it opened here and closed back down here. What's that tell us about our profit trend? Probably not as good as what we think it is. So how do you get into a good profit trend like this? You buy the signals and patterns that tell you that they're working, and you stay as long as they're working. If something opens up and it's supposed to be doing something and it does the opposite, close it out. And the reason I say this kind of quickly or with a matter-of-fact tone is if you're buying something, you're buying it based upon a reason. It's usually confirmation of a signal or a pattern that has a high probability of working. When it's not working, close it out. And the reason for that is, let's say you bought here, and you had to close out here. You gave up 22 cents. And it came down here, you could always buy it back if it came back up. Or if it didn't work, you're out for 22 cents. But you weren't in for 22 cents. You were in for something like this where you had $3. So the 22 cents is just a function of closing something out that's not working. Now, had this opened and started trading positive, yeah, now you have a much more inclination that you're going to have a good trade. Now, is this a trade you don't want to get back in? Well, for right now, you don't, because there's nothing there. It's telling us they're having a problem get through here. So you want to take your money. So if I'm looking at trades, my whole cultivation process is I've got 4, 5, 6 trades that are working, and I know what my criteria is for holding them, and that's as long as they don't have a sell signal or a close below the T line, and or they haven't moved too far away from the T line, which means I've got 3 or 4 that I've got to look at much more closely. Or if I was buying a new position and it turned like this, I close it back out. That all comes into the category of learning how to trade, and part of that learning how to trade is knowing that at least a third of the positions you put on aren't going to work. So as long as you've got that mentally in your head, and so I'm going to go more deeper. And if I had bought this, which I didn't do this one today, just because I had other things going on, but if I'd bought this one today and it started coming back down through here, what would be my first realization? At that point, they weren't breaking out. Close it out. I can stand a 22-cent loss or a 15-cent loss, but it's not so much the loss process. It's that I want to have my money in the maximum best places for, I guess I want to say, where they can get their maximum benefit. And when I see it's coming back this way, I know I'm in a situation that I'm not going to get the maximum benefit. When stocks are so close to a breakout, shouldn't you wait for it or set a breakout? Yes, you can do that, Lee. So you'll hear me many times say, this stock looks good, but I wouldn't buy it until it breaks out through this level. That means if I'm not sitting here, which I am most of the time, then I'd put a buy stop on. What's that do? I've already analyzed, let's say for instance on this one, that if it came up through 750, I want to be buying it. But I don't want to be sitting here all day watching it. So I just put a buy stop up here. If it hits it, it's going to work well. Yes. If they open positive, confirming a signal, and they start trading positive, what happens once they start coming back down through the open? Well, if you just think about what happened or what is happening, there was a buy signal and they were confirming that the bulls had taken control. Well, if the sellers have enough strength to bring it back down through the open, the point that told you the bulls were taking control, who's winning the battle at that time? The bears are winning. So that's just simple logic. And it's simple logic that we can see graphically that most investors don't even delve into. When it got up here to the previous highs, but you can see what type of pattern we were coming off. Or there's our best friend. Now, again, is this out of the picture? Definitely not. I would have been back out of this trade, even if at the end of the day it closed right here. Now what do we have? A bearish engulfing signal at the same level it topped out before. That's not a good place to be in. Doesn't keep me from closing it out, and then they open it here and start trading up, buying it back again. Or saying, all right, I'm going to come back to this one if it comes up through this level. The Tressa, yes. That's what they came out, and so the stock was trading down around 538 to 542. Don't you have to wait for confirmation? Yeah, but what was our confirmation today on the positive open? It was confirming our best friend. So I'm buying. If I was looking at this one today and concentrating on it, I'm buying when it opened positive and started trading positive. because that's what we should see based upon hundreds of years of analysis of what happens after a best friend gap up, that it should be going in this direction. When it starts coming back down in this direction, that's that percentage that's not working. Yeah, so if you have it, you want to see it open positive and trade positive tomorrow. You definitely don't want to see it trade lower and come back down below the T-line. If it does that, what's it telling you? They aren't anywhere near the breakout. Is it something? Is this something it will bounce back from, or shall we sell immediately? If it opened lower and started trading lower, you close it out. Because if you looked at that chart, would you be analyzing that that's a good bullish chart? Definitely not. Now, there are times where they'll bring it back and do a doji right here and then take it back up. So you can see they open it here and they're not moving it very much, but they're staying above the T line. You can still give it one more day. Would you put a stop at the top of the previous day's close open? Yeah, well, I wouldn't put a stop there. I would if I was moving away from the desk. But if it opened here and it's traded up here and I bought it and I had to go work or something, it's all right. Where do I not want to see it trade? And I don't want to see it trade back below the close of the previous day. So is that a scientific endeavor? No, it's just saying if this should be moving in this direction, it shouldn't be coming back in this direction. You scan for candlestick patterns with TC2000? Pretty much, yes. That's just because it's hard to teach an old dog new tricks. I use TC2000. We're going to be doing Metastock on Thursday, which is also a very good scanning software. Okay, we're still on charts. Let me start going. A bounce. Looks like it's right here at the top of the wedge. These are just things that have. There's our kind of fry pan bottom breakout. Where's our next expectation? Should go back up to the top of this trend channel. Why are we looking at this as an expectation breakout? Because it looks like a fry pan bottom breaking out. Where do we want to be when we're trading in any market? We want to be in the stocks that we can analyze based upon the patterns, have the highest probabilities of not only being in the right direction, but are going to create most profitability, which usually is going to come out of the pattern situations. AEO came out of this slow curve. We've held on to it. At this point, with it doing a Harami, we knew it was coming back here, but if we held on to it, what did we need to see the next day? It needed to open positive and trade positive. If it opened lower, what did that tell us about the seller strength? That the sellers have now taken control. Let's see. CNLS, on the opposite side, this is where we want to know or we want to learn what the nature is of signals. Inverted hammer doji in the oversold area. If you were short, what was that kind of telling you? But they aren't selling off very hard here. What should we be doing as far as setting a stop? We don't want to see a doji in the oversold area, and we don't want to see them trade back up above the high of that doji the next day. Because if they do, what's that signal pretty much telling us? That the bears aren't there anymore. The bulls stepped in. We want to stop out. AYX, on the other hand, was at a breakout level. It opened positive, but immediately started trading lower. What did that tell us as far as buying? We don't want to be buying until we see the buyers have stepped back in, which would have meant And they brought it back down and then came back up through the open. That told us the consolidation is over and was confirming the pattern. So it didn't confirm. It didn't confirm, but what did this day tell us? That the selling had stopped. What do we expect after a doji? It's going to move in the direction how they open after a doji. So in this case, open positive. Now where are we? We're sitting right back at the high. What was the first indication that the buyers were in control? Bullish engulfing, gap up at a breakout level. This still can be bought on positive trading because of this whole analysis right here. So a lot of this is just kind of common sense. But the common sense comes from the evaluation of what type of pattern we're looking at. Skechers. What's our common sense analysis of this? Big fry pan bottom, little J-hook pattern. Hasn't really closed below the T-line. There was a day that it looked like. So what did we need to see on that day? That it better open positive and trade positive. If it opened lower after a shooting star and traded lower, we were closing it out immediately. SQM. This one we've stayed short, even though it's not working very well because of the time factor of our options. But if you shorted the stock up in here where we had the kicker signal and the bearish doji sandwich, what's that pretty much telling us? That the sellers are in control. And how long do we know that sellers are in control? As long as they can't close it back up above the T-line. And what type of pattern are we looking at? We're looking at a big dumpling top. So, as an option trade, I think I bought the December puts, the 50 puts, when it was up here, thinking that if they slammed it, it'd make good money. Now we're waiting to see if they're going to get back down below 50 by the end of the week. And as long as they stay below the T-line, you stay short. Anytime you see a sell signal, like we saw over here in Dish, big bearish engulfing, it popped up today, but it was at a reversal signal. And the answer is no. It's not a bullish Harami. It's not a bullish engulfing signal. Number one. Number two, is it in the oversold condition, like this bullish engulfing signal? No. So what's our suspicion as far as adding up all the elements? We're still in a downtrend until we see a buy signal and a close above the T-line. DLTH, kicker signal. Has there been a buy signal? No. We want to stay short on this one. If we shorted it on this weakness, or even if you shorted it during the kicker signal, we're still not in the oversold area and we haven't seen any confirmed buy signals. Now, as a safety factor, I don't want to see it trade back up above the highs. If it does that, what's it kind of telling you? That the buying has started in here. You want to be back out of your shorts. NS was one of the oils that's done a stutter, what we call a stutter step. Strong buy signal, pulled back, and where did it pull back to? Right smack dab to the T-line. Are these relevant formations? Yeah, got a hammer signal, and what happened in each case? They went below the T-line and came back up. So where do you think the next target should be? Probably back up here toward the 50-day moving average. And there might be a very, very little teeny gap right there. SPLK, there's a Morningstar signal. We bought this one on the basis that it's starting a J-hook pattern, and there was a good prospect that we could have had a McMuffin based upon if it had opened positive on Friday and traded positive, it would have been the same magnitude as this, or your McMuffin giving you a high probability. But now we've got a Morningstar signal, a couple doji days, and a bullish engulfing. I would say the prospects is still pretty strong. We're heading in a uptrend. A stutter step is when you have a strong buy signal, moves up, then it pulls back without any real sell signal. Just kind of profit taking. So instead of going straight up, you get this little stutter step in here, then it heads back up. AEO, we're still holding. Never could close below the T-line. This is your cradle pattern. Somebody was asking today the difference between a cradle pattern and a column reversal. Cradle pattern usually has a significant candle here, down candle, then a flat bed of dojis, and then another significant candle. I can't remember which one it was that we were looking at as far as no, that wasn't it. May not even have it on here. But a column reversal is usually more than a significant down day, kind of bottom out. It might be a curved bottom, and then a big, huge up day. And the days are much more, I want to say, much more significant than just like a cradle pattern. Where the cradle pattern was. AEL. Yeah. Let's say this candle was this magnitude and this candle was this magnitude. That'd be much more of a column reversal. And GLYC. Here's another case where everything's copacetic, except for the fact that we now have a bearish engulfing signal at pretty much the same area that this whole candle fry-pan bottom started. So now we have a criteria. To stay long, this has to open positive and trade positive. If it opens lower, you close it out because of your candlestick signal occurring at the top. All right, some of the biggies. Tesla. This is why knowing what your doji sandwich is telling you. Big update, left-right combo. Doji, positive trading, should be trading positive. Didn't move. Positive trading. Notice that this candle right here and this candle right here are about the same. So with it opening positive today, we were discussing this over in the options room, but even with it trading right here, a good prospect was that it was going to get back up here to the moving averages. Maybe not today, but over the next day or so. In this case, it did do it today. Yeah, Roy, make sure you're on screen sharing. A lot of times when you come up, it'll be on at the very top. You'll be on slides. You'll have to click the next one to the right. Okay, some of the other biggies. Amazon, you stay long. Apple. Oh, no, hold on. I want to add some illustration. Apple, good. Now back to Tesla. Knowing what the doji sandwich is capable of doing, it's not an unusual trade. Today in PAA, All American Pipeline, here's your doji sandwich. Candle 1, candle 3 about the same. Oh, darn. There was another example, and I apparently have done the wrong signal. So ENDP, another doji sandwich. And what do we expect from a doji sandwich? More upside. So if it opened positive and started trading positive, what's it telling us? It's telling us this level right here is breaking out. You want to be a buyer because if they come up, hovered here at the 50, and then out, where do you think the next target's going to be? Everybody's watching up here. Yeah, Tesla was kind of a double doji setup with two dojis. Didn't fail in here. Had the shooting star inverted hammer open positive the next day after a doji. Should be moving positive. Did a doji, open positive again. So instead of one doji in this doji sandwich, you have two dojis. NVIDIA, nothing yet. Not until it gets up above the T-line. Netflix, nothing yet. Not until it confirms. There was your doji sandwich. What do we need to see today? Positive trading. What did it do today? Closed back below the T-line, telling you this one's not a good trader at this point. Netflix, forget all the other ones. There's one more. Apple, Amazon. I'll think of it. It's just great. All right, so some charts have real good setups. There you can see in Fitbit how you've got the J-hook pattern. There's your kind of your doji sandwich breakout. And then a positive open today, would that tell us? That this level right here was not acting as resistance anymore. You're in wave 3 of your J-hook pattern. TIVA, anytime, I mean, this is your typical price move, which means when you saw the first buy signal to close above the T-line, what was your first target? The 50-day moving average. It went through the resistance level. And then what do they do? They pull back to see if the resistance level is going to act as support. Then what do we see? A bullish Harami. What's that tell us immediately? That the selling has stopped. And then when it opens positive, what's that tell us about our whole pattern? We've got a J-hook pattern with a bullish Harami confirming right off the 50-day moving average with a obvious strong move. What do we anticipate about this move? That this wave and this wave will be about the same. There's a gap to fill up in this area. Wait a minute. There it is. No, it's a J-hook pattern, though. Same scenario. There's your Morningstar signal. Right here, positive open. Fry pan bottom. That's your classic pattern. I skipped some. QD, little scoop type pattern. Very little left-right combo, gap up. I wouldn't be afraid to be buying this one. What's your first target? Right here, making the doji sandwich prospect pretty high. And then your next target up here, there's a wee little gap right about that level. So anytime you can add as many pieces of evidence of where your target might be, the higher the probability, because if you can see where things might be moving, that means everybody else can see where things might be moving. SRAX, J-hook pattern setting up. This one has good volume. Jill is a fry pan bottom that all you have to do is stay long as it stays above the T-line. If it opened lower tomorrow and I was a trader, I'd probably take profits with the anticipation they're coming back to test the T-line. Grub, J-hook pattern. Observe the obvious. Every time they tried to knock it down here at the T-line, they brought it right back up again. Notice what type of signal we have today. There's our dark candle, and then they gapped it up above the previous day's open and did a doji. What's that setting up for? Looks like a bullish flutter kicker. We have a bullish flutter kicker. What's that tell us? That wave 3 is starting. Wave 1, wave 3 would be in progress. CTL, Anytime you see a gap up, that's strength in the oversold area. First target, second target, third target, kind of corresponding with the 200-day moving average. Oops, hold on, technical problem. Oh, okay, now I've got it working. All right. Overstock. Here's kind of your doji sandwich, trend kicker, J-hook pattern. Observe the obvious. Where do you think the next target's going to be? What the existing trend already was. Look where your bullish engulfing occurred, right smack dab off the 50. So again, this isn't coincidence. This is where everybody's buying, and we just can see it much more clearly based upon the graphics, the candlesticks. NKTR, the breakout with the inverted hammer, the gap ups. Now what do we got? A J-hook pattern, especially if they open positive tomorrow. A trend kicker is, what one was it? We know what a kicker is. A kicker is kind of like this, except you want to see a bigger candle, where they open here, close lower, red candle. The next day they gap it up and go the opposite direction. That's your kicker signal. A trend kicker signal is you're already in a trend. You have a day where they take it down, and notice what they did the next day. Gapped it up above the previous day's open and went the opposite direction. Same strength as a kicker, but it's already the trend has already started. It's basically telling you that there's going to be more strength in that uptrend. A belt hold. Somebody pointed this out earlier today in the chat room. Notice where it opened way out of the trading range. It does not appear to me that you guys are consistently sending this link out. I don't know what that link is. I forgot. Oh. No, it's not too late to buy Overstock. As a matter of fact, we'll probably be recommending that tomorrow, if not as a stock trade, as an option trade. But notice how they gapped this way down here, and then it hit the 50. More evidence that that's where they were buying, and then brought it back up. In this case, they did a belt hold bullish engulfing signal. That belt hold said they wiped out a lot of sellers. Expect be less sellers in front of it at this point. What did I just do? That was STML. And Soro Auto Parts. Why is this looking good? Because if it breaks out through this level, probably got another wave to the upside. And you can see you can see where there could be a breakout area coming off a signal. There's your doji bullish confirmation. Gives you that much more credibility that once they break out, that's where everybody else is watching. Yes. Probably in this case above the 770, what is that, 775? Is that what you said? Yep. No, was it SYMC? Yes, that's kind of your tower reversal. Notice that your bed here is not a flat bed, more rounding, but big down day, big up day. These columns, hey, there's been a drastic change of investor sentiment. Thank you, Bob. TDD was a good short, and it continued down, but then you had your doji, bullish engulfing in the oversold area. That told you if you were short, it wasn't breaking down. It was starting to come back up. Now you've got kind of your trend kick, not your trend kicker, but your doji sandwich. I wouldn't be afraid to be buying this one. Just watch to see what it does here. But there's a gap all the way up here that I would suspect they're heading up to that level. FENG, another J-hook pattern setting up nicely. Again, coming off of dojis through the T-line, like somewhere up again up toward the recent high. AMC. J-hook pattern setup. Notice where it's supported, right here at the 50, starting back up. Where's your first target? Right here. If it breaks there, where do you think you're heading to? The 200-day moving average. Now, when I say where do you think you're heading to, as long as you don't have a sell signal, even though it's waffling, that's more than likely your target. But the number one criteria for coming in or out of a trade is based upon the candlestick signal. The targets are just to give you a platform or a playing field that if this was going to be a 4% move, it may not be worth your while. But if it's going to be a 17% move to get up here after the bullish left-right combo, the bullish doji sandwich, that was probably something more apt to trade. Whoops, that's apparently what we did. And Maxwell. Inverted hammer, doji, bullish confirmation, closed right on the 200. So if it opens positive tomorrow, what do you want to be doing? You probably want to be buying immediately, because what would it be telling you? It's confirming the buy signals. It's telling you the 200 is not acting as resistance, and it's probably confirming wave 3 of a J-hook pattern. So if that's our expectation, and it opens positive, where do you not want to see it close? You probably don't want to see it close back below the 200. That's telling you they didn't break out through that level. And GLNG, another J-hook pattern. You're at the breakout level. Just a nice, steady, uptrending stock. So this gets back to, how do you know when to get into a steady uptrending stock? You don't. You're buying when the probability say it's time to buy. You're selling when it's telling you when it's time to sell. We had another one, but I can't remember. But this is what we're looking for. If you can get your portfolio set up that if you've got 10 positions on, and 5 of them look like this, where you don't have to do anything until you see a sell signal and a close below the T-line. And even this one today, with it backing off, didn't do a sell signal. It's just a down day and an uptrend. However, what's our criteria? We want to see it open positive and trade positive to stay in it. We don't want to see it trade lower tomorrow. Okay, and not too many I'm not really interested in shorts at this point. Now this one, ISRG, you can get ready to go short if it opens weaker, because you do have your left-right combo, and you're looking at a bearish J-hook pattern. That the next target would be right here. And if it gets through there, and where you have your big downdraft. So as long as this market is maintaining this uptrend, you just stay long, or at least you want to be heavily oriented toward the long side. Let's see. So tomorrow, I've been promising that we're going to do tomorrow we're going to work on stop losses. So we'll be back here at 8 o'clock. This is for members only. Here's a member. So we're just going to go through some of the basics or the logic of the stop losses that we can see in with candlestick analysis. Also, this is what we do right around Christmas time is we put out this special. And that's all 3 books. Do you change your stop daily? Yes, depending on how the prices are moving. If I've got a trailing stop, I'm usually moving it back up. Tomorrow will be at 8 o'clock. Let everybody get rested up a little bit. Each Christmas season, we put out our book special, which is all 3 books for $119. So with that, we get a lot of questions saying, well, what if we've already got one of the books? And the answer to that is that if you've got one of the books, you get all 3 because it's still a bargain, and then you give whatever you already have as a Christmas present to somebody. So anyways, and the reason we do that is because through the years, when we've done this, we get so many positive responses. Somebody said, "Oh, I gave this book to my nephew, or I gave this to my good buddy of mine, and the book that I already had," and they come in. So anyways, there's the link. Okay, so with that, any general questions on candlesticks? Oh, Hank, no, you just show up tomorrow here at the same place, same, we won't be changing the password. All right, I guess, Jim, go ahead and do the double line. And in 3.2 seconds, do the next double line. All right. Shopify. That one is one that you wanted to see what it would do once it got to the T line. Looked like it failed the 50, but today it opened positive and trade positive. It probably wouldn't be the best one to be in, but right now I would stay long until you see a sell signal. And SRAX, J-hook pattern in the making. That one you can get ready to buy on positive trading tomorrow. Nice J-hook pattern on this one. Wouldn't be afraid to buy. If I was buying tomorrow, if I was going to be conservative, I might be buying a half a position. And then the next day or so, if it breaks this level, buy the other half a position. BIIB. Look for a doji sandwich breakout from here. Just stay long. AMGN. Looks like it's trying to do a bobble breakout. Another one that I'd be buying on positive trading, especially if it came back up through today's high. Lumber liquidators, fry pan bottom. Just stay long. Boeing. Boeing, I think, is at its all-time high. If you own it, you just stay long. I think we did Teva, didn't we? Teva, you stay long. You can actually be a buyer of this one on positive trading tomorrow. VRX. Oh, breaking out nicely. Just stay with this. You're in the overbought area, so your safety stop as today is open. If it comes down through there in the overbought condition, that means the bears are definitely taking control. NSC, 45 degree, you just stay long as it stays above the T line also. Tractor Supply, a little bit junky in here. It needs to open positive and trade positive. More than likely, yeah, if you're long, it needs to stay above the T line. It's not a real vivacious looking chart. Bison, get ready to buy this one if it opens up above the 50. There's a little gap to fill here. Then you want to make sure it breaks out through this level. Roku, bullish engulfing. Stay long on this one. I would suspect it's coming up to this level and see if it breaks out through there. Then stay long, 45 degree. GSM, nothing. KND, you can buy this one if it opens positive. There's your doji sandwich, and notice what it opened positive. What would be the magnitude of this candle? Same as this, and where would that take you? Right to the 200. LXFT, nothing wildly exciting. We just anticipate it's heading for the 200. NOC, nothing great. You're sideways. I wouldn't pay attention to it till it broke out through the 310 level. PSEC, a little slow curve. You could be buying this one. Just make sure you got a lot of volume in this one. OLED, not real great. Boy, yeah, not real great. That looks more like it's going to be stuck in a sideways downtrend. CGNX, same scenario. Having a hard time getting up through the 50/T line. I'd be more apt to be ready to go short on this one if it opened lower tomorrow. Thinking that you're probably in a very J-hook pattern. Very nothing. No trend. Fastenal. Whoops. Stay long, but you can see the little wedge formation with a doji. If it opens lower, you close it out. That means they're heading this way. Obviously, they're going to move in the direction of how they open tomorrow. L brands, just stay long. Nothing wrong there. EXAS, yes, stay short. That one I'd be more apt to go short with the prospect that they're heading down to the 200-day moving average. AVGO, you stay short on this one, but you can see where you're sitting, right? Smack dab on the 50. So I would definitely have my stop at today's high. It shouldn't come back up there if you're short. Wouldn't be a buyer until it closes above the T-line. NetEase, that one you can be buying as long as it stays above the T-line. With that big move today, taking you well above the T-line. SGYP, nothing here. Wouldn't be long or short. Cisco, be ready to buy this one. Got this little slow curve. You got the inverted hammer. If it opens positive, it's at least coming back up into that trend trajectory. Newmont, Stay short. T2. That's a toughie. It needs to get up through the moving averages. If you're long, which I probably wouldn't have been on this one, it's got to get up through these moving averages. iGate. Nothing. Not until it breaks out. STDY. Same scenario. Whoops. Did I do wrong? iGate or STDY? Be more apt to go after that one on positive trading. Remember, there's your message. Let me do iGate. No, that was still the same one. Rockford Collins. I'd be more apt to be going after the fry pan bottom. I don't know whether I can get the E-minis over here or not. wouldn't be hesitating to buy this on positive trading. BABA, nothing wildly exciting here. No reversal signal. You're still below the 50. You're trading indecisively. I would probably be someplace else. And Bidu, same scenario. Nothing on that chart that makes you analyze that there's a lot of bullish sentiment right now, still sideways. Starts at 8 ET tomorrow, yes. Uh-oh. Now I got the sneezes again. We got 5 fireplaces in this house. And if I light the one upstairs, I just get smoked out downstairs. It just doesn't make any sense to me. Smoke going in the wrong direction. ALXN, nothing of any great consequence here. No chart to really analyze as far as telling you which way it's going to go. I'd be someplace else. Square, nothing. Hasn't been able to get up through the T-line. Kara, nothing. Had the opportunity to break out of this fry pan bottom and didn't, I'd be trading something else. Blue, there's your message. So if you've been holding this or you're thinking of going long, you wait to see when the profit taking's over from this move, but the message is it's probably going higher. You just wait to see what signals you see to tell you the selling is over. Ocular, you can get ready to buy this. Make sure the volume is good on positive trading on a doji breakout, doji sandwich breakout. And PDFS, nothing. Don't have a reversal signal. All you're doing is supporting at the 50, but you're not seeing any buying pressure. Intel, you can get ready to buy this. You're not going to make a whole heck of a lot of money with Intel because it's your proverbial institutional trader. Amazon, you can stay long as it stays above the T-line. General Dynamics, another one that if you're anything, you should be short, but probably right now with the support level at the 200, I probably wouldn't be long or short on this one. I'd be, again, another one. There's a lot of charts, a good number of charts that are just moving sideways. Aren't you really showing you much of anything? Which means you go after the charts that are showing you stuff. Arna, all you can do here is stay long, but you do have a bearish engulfing. You're in this uptrend. It needs to stay above the T-line. Boston, can't get through the T-line. If you happen to have gone long in the last couple of days, If it opened lower tomorrow, I'd close it out. It needs to open positive and get up through the T-line. AMD, nothing. Wouldn't be long or short. Constellation Brands, nothing real dynamic here. Probably wouldn't be buying any of this until it breaks out through this level, because you're still kind of pretty well sideways on this one. Oh, pshaw. Microsoft, you can stay long. Won't make a whole heck of a lot of money with it, but you're moving in the right direction, kind of a little scoop type pattern. Alaska Air, still trying to get up here to the 50. If it opens lower tomorrow, you close it out because that would signify that you're in the bobble. Then you can always buy it back when it comes back up through the 50. That would tell you you're in a bobble breakout. I'd be out of this one. TCCO apparently announced something that, and here's another case too, where having your safety stop at the previous day's open after a big move is a logical place. But right now, I would not be long or short this one. Let's see. REGN. You got a nice Morningstar signal, big bullish engulfing. You can stay long on this one. You just have to break this downtrending channel. We did Kiva. TMUS. You can buy this if it opens positive tomorrow. There's your bobble breakout. Let's CELG. That's a dark candle. So there's your message again. To stay long, it needs to open positive and trade positive to come up to the 50 and then eventually fill the gap. We did Tesla. Tesla, you stay long. You especially want to see it open positive. It's probably going to use the moving averages as support, but as long as it doesn't close below the 200, you stay long. Fran, Morningstar signal. If you'd been short, you would have covered it with it coming back up through today's high. You can think about going long. If you buy it on positive trading, just watch diligently at the 200 to see what it does at that level. Not the 200, the T-line. INFN, with the inverted hammer bullish confirmation, you can be buying with the anticipation of heading for the 50. And ANET, you buy immediately on positive trading tomorrow. That would be your double doji setup. So you can see, obviously, they bounced with an inverted hammer off the 50. They opened positive. That means the consolidation right here is over. They're still heading higher. And VA increase their dividend. All right. Twitter, not too much here. It's more than likely moving up. There's your double doji setup to the top of the trend channel. But it's not a big percentage move. If you like it, you can stay long, but it wouldn't be one of my favorite spots to be in. Walgreens, another one that's not going to make you a whole lot of money. I'd be someplace else. And is this in the morning? No, tomorrow at 8 o'clock Eastern Time. Oh, well, no, because I had the fire in the fireplace last night upstairs, and I've had them here downstairs. Yeah, when I first moved in, I had them come over and check all the chimneys. Got 5 fireplaces, so um, that's right. Like a big U-tip. GBTC not working. I don't think. GBTC. No. NVIDIA, nothing yet. It needs to get through the T line, but you can see there isn't any real reversal. So I'd be kind of watching to see if they can get through there. Oh, I don't know whether they will show you the scan because since there isn't any actual trades, Keto, Greg, they wouldn't show. The best thing to do is come into the chat room. That's usually where people are saying, look at XYZ, it's gapping up. Tomorrow at 8 p.m., just the same time as we do this, we're going to do for members only, a stop loss. Bob, yeah, we did have a few days last couple of years. We had all 5 fireplaces. Okay, guess we got them all. As long as this market stays above the T line, just stay long. And yeah, and this one was just Mara. This when you think things are getting good, then they come out with a stupid offering. The offering, because it's an offering and not a change of investor sentiment, they'll trade lower, but then after a day or two, they'll start taking it back up again. T-line is the 8 exponential moving average. You put it on your charts just like you would any other moving average. Yeah, same password. This again, it's for the members only. All right, everybody, have a good evening. I'm sure you're all rooting for Miami to beat the New England so that puts the Steelers in first place. All right, everybody. We'll see you tomorrow morning in the chat rooms.